652 crores and
okay, so that's 13% growth.
Okay.
That's a 13% growth, and we were working with a estimate of around 5273. So we couldn't be more accurate in terms of the profit as well as the NII, or the street couldn't be that much. So that's really not the concern for ICICI Bank. 13% growth on the NII, 12% growth in terms of the profit. What we're waiting by is for the commentary on the asset quality. The internals of the asset quality will be key. The gross NPA also not looking too bad. It's just a 9 basis points movement which has come in. Other factors that we'll watch out for will be the press release itself, which gives some outlook in terms of the restructured book, how that's looking in terms of how they've done, as well as the management commentary, which would be key. But overall, right now, what we can say about ICICI Bank is that it's an okay set of numbers. It's largely in line in terms of what they have reported on the P&L. Now I have the press release with me, so I'll just take you through it. 1.65 is where they've come in on the net NPA versus 1.58. So that too is around a 7 basis points worsening, which is coming on a Q1Q basis. On an absolute basis, it's been 15,857 crores on the absolute gross NPA. This compares to 15,137.61 crores, and the net NPA has come in at 6,759 crores versus 6,333 crores. So there's been an absolute rise in terms of the gross NPA as well as the net NPA figure. But overall, what I can say right now is that ICICI Bank has largely, in terms of the P&L at least, come in line with what the street is estimating. So net profit 30 crores, gross NPA up 9 basis points, the net NPA is up around 9 basis points as well, and otherwise, in management commentary,
the provisions are also largely okay. Provisions are at 942 crores versus 955 crores last quarter. So quarter on quarter, actually, provisions have gone down, slightly higher on a year-on-year basis.
Stable.
So stable, you'll have to say. These are a decent set of numbers coming in from ICICI Bank. In case you've joined in late, 12% profit growth, about 13% at NII growth, and the asset quality, well, you may want to argue that it has slightly weakened, but not too much. It's just weakened a tad bit to 3.77% versus about 3.68% that we saw last quarter. A couple of other details that we are getting. The capital adequacy ratio is also largely stable at 16.15 versus about 16.37 that we saw last quarter. So no changes over there. Suffice to say that there are, at least for now, there are no shockers that are coming into the ICICI Bank numbers, and that's the reason the stock as well is holding up. So decent set of numbers, you'd have to say.
Yes, decent set of numbers on the P&L, but might I caveat that with saying that Axis Bank also reported a decent set of numbers. So while the P&L looks good, what we can say right now about ICICI Bank safely is that we have to wait by for the management commentary on more details. It's just about around a 4.8% rise, which is coming on the gross NPA on an absolute front.
Okay, they've also made an announcement.
Sure.
The board has approved a sale of 9% stake in ICICI Lombard General Insurance to Fairfax Financial Holdings. So that as well is an announcement that they've made. So they will be selling 9% stake in ICICI Lombard General Insurance Company to Fairfax. The proposed transaction value of the company is 17,225 crores. So $2.6 billion is the transaction value, the sale of a 9% stake in ICICI Lombard to Fairfax Financial. Upon completion of the transaction, the share ownership in the company of ICICI Bank and Fairfax will be approximately 64% and 35% respectively. So it's a 17,225 crore transaction that has been approved.
So that actually would be an important trigger for the stock, because even with HDFC, one of the key things that the street was working with was the fact that the insurance stake sale would be an important one, and an additional 9% stake which is being sold to Fairfax, and hence their eventual stake will rise to 35%. It's interesting because that was the same thing that the HDFC management said with regards to Standard Life Insurance as well, that it should eventually be raised only to around 35% as opposed to 35% as opposed to that total 49%, which is the cap with regards to FDI and insurance. So that's an important trigger for the stock. Additional and incremental rises because of that news as opposed to just the P&L, because the commentary is still not known from the management in terms of the internals of the asset quality, what that looks like. But because of this particular 9% incremental stake sale for the insurance business.
Oh, yes.
That's the reason why you're seeing the stock rise.
Also, it is a big deal, you know, 17,225 crores is the transaction value for this 9% stake, and that's the reason you're seeing an incremental up move on the stock at this point as well. So good, decent numbers coming in from ICICI Bank, and they have approved a sale of 9% stake in ICICI Lombard. We're getting some more news at this point on Sun TV that the board will be considering a buyback on the 5th of November. So that's an additional piece of news that you're getting on Sun TV, that the board will be considering a buyback. But you know what? Let's focus on ICICI Bank for a bit. Vaibhav Agarwal is also joining in, and Lata will also be with us in a bit. Vaibhav, your initial comments on the numbers for ICICI Bank?
Well, broadly they are in line, you know, even on the operating front, the net interest income is in line with expectations, the bottom line as well. And even the net NPA number on the face of it looks to be more or less in our expectations. So I think overall on the report seems to be a decent set of numbers. Of course, you know, the valuation at which, you know, they've got for Lombard is way more than what has been, you know, building into our SOTP target price. And at this kind of a target value, that would easily add about 10 rupees to the target price for the stock as well.
I also want to add that the net interest margins have also improved for the bank to 3.52% in this quarter from 3.42% earlier.
But it's 3.54% in the previous quarter, so it's flat on a Q-on-Q basis. And year-on-year, there's been an improvement, and they've maintained their growth in terms of retail advances, up 25% at this point. The press release has opened, so the restructured loans bit should be there, but I'll toss it over to Lata, who has more perspective, holistic perspective.
No, I just wanted to add that the margins should be taken as not all that positive, simply because quarter on quarter, as Ekta pointed out, it's actually flat, maybe a little lower, but I think that's not the most important point. I think the valuation that they've got for Lombard is significant. As well, we need to know what their if there are any asset reconstruction sales, or if what the amount and number of accounts have been refinanced. Those would be important, because ICICI has low exposure to Ratnagiri Power, which we know is on the verge of being refinanced. They also have exposure to SR Power, which I think indeed has been refinanced. So some of those numbers will come out, but they are known. They are known devils. Vaibhav, what kind of a number on the refinanced category would be okay with you?
Well, actually, you know, we are looking at an overall sort of stress addition of about 3,000 crores for the quarter. So, you know, if it is, you know, in that kind of a range, and, you know, within that, of course, 525, you know, we don't have a specific number for that. But yeah, overall stress additions, we are looking at about 3,000 crores.
Okay. Vaibhav, give us more details in terms of the insurance business. What kind of valuations were you working with, and how much more is it as opposed to what you had penciled in?
I mean, you know, this clearly looks like a pretty high valuation. You know, it would be almost close to double of what, you know, we were factoring in. So, and which is where I said that, you know, I mean, it would clearly add straight away about 10 rupees to our target price for the stock. I think it's clearly more than what it was have been building for Lombard.
So do you think that could negate the performance of the stock, even if the asset quality internals disappoint today?
Well, you know, I mean, like I said, eventually the impact of non-life would not be more than, you know, 7 to 10 rupees, depending on what, you know, analysts would have been factoring in. So, you know, it still would be important to look at the asset quality number, in fact. And if there is a large chunky number like the way we saw in Axis Bank, that could still, you know, impact sentiments for the stock, because that remains a key monitorable.
Okay. But at the moment, the increase in stress, as far as their increase in GNPLs is concerned, is barely about 600 crores, going by the increase in GNPL. One would assume that slippages are somewhere around that category. Would therefore, should the market therefore start worrying less about the NPL issue, the stressed loan issue at all?
Well, not necessarily. I mean, you know, of course, we have to look at the internals of what the movement in the gross NPA was. And, you know, more than that also, like you mentioned, you know, what the sale to ARC, etc., may have been during the quarter. And I mean, at all said and done, ultimately the stress in the system is still there. So even if in this quarter a lumpy account has not come, you know, it does not completely get rid of those worries. But yeah, I mean, at least on the face of it, the net NPA and gross NPA numbers look encouraging.
Okay, well, just one important point, Lata, which they mentioned in their asset quality in the press release. Net loans to companies whose facilities have been restructured were 11,868 crores as of September 30th, 2015. This is compared to 12,604 crores in the previous quarter. So Q on Q, that has reduced. Vaibhav, that generally doesn't give you a clear indication in terms of the proper internals. But what have you made of this figure, 11,868 crores?
That is also encouraging. I mean, of course, because of repayments that happen in earlier restructured loans, plus some upgrades that happen, after the 2 years of servicing. I mean, so that number, like you mentioned, does not necessarily give a clear picture of the incremental stress. But yeah, I mean, on the face of it, again, a decline is a positive sign.
Okay. Any other comments in terms of the net interest margins, or in terms of loan growth or NII? They're all up to your expectations?
Well, on the NIM, we were not really expecting much impact because ICICI Bank had not really taken a base rate cut, during 2Q. Their cut had come in April, and then straight away in third quarter they've done a cut now. So we were not expecting anyways on the margin front any major disappointment. So margins are in line, even NII growth and retail loan growth is quite strong. So I think on those numbers they performed well.
Okay, Deepak Shenoy is stay on with us, Vaibhav. Deepak Shenoy of Capital Mind is also with us. Deepak, your thoughts first on the asset quality. Will you be relaxed after this number, or would you still want to wait to see some details?
Yes, I wish. No, I think more details are required. I want to see the split of what's happened with the restructuring changes, especially with and with fresh slippages. But I think overall the numbers are okay, pretty much in line with estimates. I think ICICI is one of the weaker private sector banks in terms of earnings growth. We've seen only a 10% or 12% number this time compared to most of the others. However, asset quality has weakened, and I think we need to research more into that at this point.
Okay. Well, actually, some more internals, Vaibhav. The year-on-year advances growth is 17%. The year-on-year deposit growth only in the savings account is 14%. Do all these add incrementally to your evaluation? And the current and savings account ratio was at 45% compared to 44% in June.
Well, yeah, I think, as far as the loan growth has also come in higher than we were taking a number of around 14.5%, 15%. So I think they've done well even on the overall loan growth front. So that is also a positive. Okay.
Deepak, I wanted your view on the insurance stake sale. 9% for over 17,000 crores or $2.5 billion.
That's actually a pretty good number for ICICI Lombard. I think it's a good thing that they're selling the stake right now. I'm hoping that at some point we will see the IPO also come in whenever all the regulatory pieces are in place. I think this is a good development. It will give them more cash without having to dilute, and I think capital will be essential going forward.
Okay. The Reserve Bank had asked banks to account for interest, funded interest term loans in which they fund the interest as well. Now, since this had to be applied retrospectively, a part of that 929 crores has been actually taken from the reserves. Vaibhav, anything on that? The current years has been taken through the P&L. But the prior year's funded interest has been taken away from the reserves to the extent of 929 crores provided for.
Well, I mean, that of course, because it's an RBI guideline and, it's retrospective, so one cannot expect the entire amount to be taken through the P&L. So I think that would be in line with, what was expected anyways.
Provision coverage ratio has come in at a little lower, 57.4 compared to, I think, 58.2 in the previous quarter. That's a marginal fall in provision coverage ratio. I don't think that merits too much by way of worry.
Yes, well, I just wanted, since we have Vaibhav with us, what do you make of the Kotak numbers? There were more details in terms of asset quality there with regards to no sale of loans to asset reconstruction companies and all that. Your read-through of the numbers?
I'm sorry, actually, that's not under our coverage.
Okay, Deepak, what about you?
We've taken an early look at this. I think the problem is the ING merger has changed a lot of these ratios. We don't, I don't have a lot of color right now in ARCCL, but overall the net and asset quality has worsened even from the earlier quarter. So in that context, it's not just the ING merger, but it's also the incrementally we've seen a bit of damage. So I think Kotak also, the net profit number had come, the earnings growth has come down only to 15%, because here you can only compare EPS growth, not the actual absolute numbers. So that is also a little disappointing for Kotak Bank for us.
Okay. Well, actually, in ICICI, the operating expense control has been quite remarkable. Operating expenses have actually fallen from 2,800 crores to less than 2,700 crores. So that's a fairly, tight leash on expenses, though cost-to-income ratio has risen marginally. Well, those are minor internals. I think what we have to now wait for is any details that we may get on whether there were asset sales to asset reconstruction companies, or what is the total quantum of loans that had to be refinanced, and what was the nature of the loans that were refinanced. Were they otherwise sturdy loans, or would they have slipped into NPL without that kind of refinancing? Is that all you would wait for, Vaibhav?
Yeah, I mean, pretty much those are the key monitorables right now.
Okay. All right. And Deepak, what about you? And just one more question that I had. Eventually, do you see the outperformance that Axis had versus ICICI to narrow simply because of Axis's performance this quarter?
I think, Axis has done better in general, but, I think that both banks are now, we are coming to a point where asset quality concerns are becoming more rampant. So now I think Axis's portfolio is more likely to see intermediate news-based hits compared to ICICI's, but that's just an assumption because we don't get a very clear idea of their entire portfolio.
Okay. All right. Deepak, since we have you with us, Sun TV has announced a buyback. Your thoughts on it?
Oh, I haven't tracked Sun TV's buyback, I'm so sorry.
All right. I think we'll have to call it a wrap on the coverage on ICICI and Kotak. Vaibhav, Deepak, thank you very much for joining us.